Samish Shamsuddin. It's an absolute pleasure to be here today to introduce someone who not only has built one of the largest fresh meat delivery companies in the world, but also happens to be an old school buddy and family. Shan, the co founder of FreshToHome, someone whom I hold close both personally and professionally. Shan started his career in Silicon Valley, where he worked with famous personalities like Peter Thiel. But Shan wasn't just content with that. Instead of staying in the comfort of his success, he made a bold decision to start something that made a huge impact, Fresh to Home. Privileged to be associated with Fresh to Home since the early stage, I've learned so much from Shan. Despite running the FX and commodity derivatives business for the bank, I have to admit that I take immense pride when people sometimes introduce me as Fresh to Home guy. It is how deeply Shan's vision has impacted those who are being close to him. Fresh to Home is a testament of his hard work and leadership. It is a vision on how fresh quality food should be accessible to all, powered by technology. So without further ado, Shan, please.
Thank you. So I must first met Samish. Samish is my schoolmate from Shah Indian School. So he was always the more fairer and more handsome than me. So he was the groom in the Maplapatu thing, and I was the guys that was doing this, the background stuff. So that's how we know each other from school days. He's 1 year senior to me. And then eventually, we became friends and family and all kinds of stuff, right? So he's also one of my angel investors. So I don't know if you guys know that aspect about him. So I know there is a fixed agenda, and I saw something in the beginning. It said success story, and for an entrepreneur and potentially for also funds, success, it can come in multiple ways. Obviously, success is about ramping up a company, giving value to the society and so on. But from an entrepreneur perspective, a success would be when you get an exit, right? You have to give an exit to your shareholders. So we are not yet at that stage. So I thought I'll change the title to learnings. So more about the startup and how we do that stuff. That's what's going to be interesting to you guys, right? Okay, so I'll start with that and then we can tweak it around and do that. And if it ever gets, monotonous, let me know, then I'll change the topic. So a bunch of different aspects that I thought I could cover is really in starting Fresh to Home, how did we get started on the various aspects required, right? And obviously the first thing is around the team. And I did tell you that how I got Samish as a team member, and that was the dance performance then. But beyond that, I met my current co-founders all through the course of my, 25 years of experience or maybe even higher than that. So most of my early co-founders are all folks that I met in college. So if you look at Jayesh, and there are some people who are not here, but they're all from my classmates from college. And these are some of the best technical talent in the world. And then I met Matthew, my other co-founder, when I was a customer of his. So just a quick background is post living in Sharjah. So I was here in Sharjah from 1984. My father, Dr. Mohammed, was with Al Qasmi Hospital in Sharjah. So he was a doctor. So I lived here from 84 to 95. And so I'm a Dubai kid and Sharjah kid, and I've done all the sort of stuff that you guys would have, some of you at least may have gone through. Post that, with my engineering, I then did a small startup in UAE. And I don't know if anybody's aware. At those days, I was doing a Linux kernel. I was tweaking it from some of the stockbrokers here in the UAE. That was in 99. I wasn't out of school. That was in the final year of college. That venture actually was reasonably successful, and it grew to a company called Zircon in the end. And then I was earning a fair amount of money in Dubai at that time because the trading consistency required a steady connection. And those days were the days when you had dial-up modems here. And we created an ISDN solution and so on. So that was in the early 99s. Then for some reason, my father felt that I had to see what's going on in the US. So without my knowledge, he had put my resume up in Monster or Dice. I forgot which one it is at that time. And then somebody from the US called me and then I landed up in New York and then in San Francisco in '99. So since '99, I've been in San Francisco. So I started with a company called Support.com where I was a programmer, and that then grew up, and I became their enterprise CEO when I was about 27, 28. So I did all the mistakes that a 28-year-old would do with a publicly listed company in Nasdaq, which is means I would have screwed up a fair amount of bit early on in my career. And then post that, I started a cyber security company called Debox, and that was reasonably successful. I sold that in 2006, 7, 8, 9 timeframes, and then post that, I joined my Xbox. If you look at, so the gentleman on the second, right, is Mark Pincus. He's actually a legendary entrepreneur. He's a guy who started a number of companies in the Valley. And if you've seen the sitcom called Silicon Valley, any of you have seen that sitcom? It's quite popular. He stars in one of those stuff as well. So anyway, so Mark started Support.com, and then Mark started Zynga. And then because we knew in that circle, Zynga then became extremely large. So and I was one of the early CXOs in San Francisco for Zynga. And I used to make games like Farmville, Mafia Wars, Poker. I used to do a lot of those kind of stuff. The Farmville was quite successful, and it was like, just to give you guys a sense, it was about $1 billion in revenue, and did about 30% net margin, which is unheard of in this time. Right? I'm in e-commerce, which is hard to make money out of it, but gaming was a very interesting side at the time. And I had an exit in 2011 with Zynga, because we IPO'd at that time, and it was one of the largest IPOs in the Valley then. I then relocated back to India, and this was around the time that I met Matthew, my co-founder, who was a fish exporter. So he had started a company called Sea2Home at the time, and then Sea2Home was doing fish from Cochin to Bangalore and Delhi, and I was buying as a true blood Malayali. I'm told that there's a fair amount of Malayalis here, right? So anyway, so I started with buying fish from him. I love my fish, which I get from my, I am from Edappal in Kerala, and Panani is the closest that we have, right? So the fish is really good, and I miss that all the time in the US. So I used to buy from him, and at some point Matthew couldn't supply things any longer because his startup had shut down. Because getting an e-commerce company up and running, now that I've done that for like 8 years, I wouldn't advise that if you're a faint of heart, right? It's just incredibly hard, both from operational standpoint, fundraising, ability to withstand a fair amount of that. And that's really how I angel funded him. And then we started a new company called FreshToHome. That's how the band got together. Matthew and I are the prominent faces of the startup, but we are 8 co-founders, and we have one from everything. So the reason I tell you this is, one is, if you're ever looking at doing a startup, at least from my expertise, when it is a startup that will probably in the early days lose a lot of money, and you will probably lose a lot of hair, it's best to have co-founders who can handle certain areas of the business. Because I wouldn't have been able to do this kind of a pressure, like with 9 years and this kind of a startup, unless I had folks who are taking care of the various different areas, right? And it's very, very important to do that. So that's really the story of how we got together. We then, got a bunch of different investors, got things started. I bootstrapped for the first year. I didn't take any investment for that time. And I was the angel investor, so to speak. And then we then got our first investor. So Samish obviously came in very early. Samish is also an entrepreneur. No? He's got 2 chains of medical clinics. Again, if you want to know more about him, you can find that out. And Samish introduced me to Mr. Abdulaziz Al Ghurair through Ali. And he was one of our first angel investors. So, but by then I had got Peter Thiel and Pincus and, the CFO of Facebook and CEO of Google Ventures. And then I have a couple of Hollywood movie stars as well. One is like, there's a guy called Thomas who's the Nightcrawler in X-Men. I don't know if you've seen the X-Men movie. He's also one of my cap table guys. So those are the early guys. And then we raised capital from, private equity firms, venture capital firms, and the US government and a bunch of others. And the latest round was from Amazon. We are also a case study in the Stanford Business School now, and I teach 2 classes there in a year. So this is really at a high level. One of the key things that stand out is we probably have a disproportionate tech for a company of our size, right? So we have about, close to about 5 NASDAQ CTOs have been part of most of the early projects like Linux or others and so on. So just skipping to our topic. So I think, one of the key things of consideration, and I'm sure you guys are, as investors in the room, would already recognize this, is that it is important to sort of go in, depending on obviously the area that you're focused on, with a team. Uh, I do get a fair amount of pitches, and I'm sure that all of you guys do. And I'm sure that you would probably not consider, depending on the domain, of course, a startup without fair representation of a team. So if you are obviously doing a tech startup, I suspect that you will need a tech co-founder, you will need a product manager, and so on, right? So this is one of the key things that I would consider. And most of my networks were actually people that I met in college, or I did it in the first 20 years of my career. So, and I suspect that that's a story with pretty much every other entrepreneur, right? It will be people that you trust, you would know somewhere, or you would use the extended network to do that. There's a bunch of different considerations, and if you're interested, we can go through it in detail on how to structure your equity, what would you do with co-founders versus the others. But in general, one of the key things to understand is that a smaller piece of a larger pie is always better than a larger piece of a smaller pie. So it's best to sort of figure out how to sort of do that structuring so that there is very large alignment with your early folks. And it's also important at the same time to do that in a time vested schedule. So it's rather than giving it upfront, you will need, for their benefit and your benefit, it needs to be vested, because people can happen, priorities can change, and so it's important to sort of do that over a period of time. Serendipity is something that I see all the time, right? Serendipity is basically some positive sort of incident that happens accidentally. I see serendipity happening all the time because it would be somebody that I would have met somewhere. And I'll give you guys a story. Our kebabs in India are really, really popular. And this was a gentleman that I had met called Jamil Bhai in 2020, in about 25 to 30 years back, when I had gone to Delhi to do something. And I stayed in touch with the guy. And finally, I got him to launch in FreshToHome. And that kebabs in India are incredibly popular. So what I'm just telling you guys, and I'm sure this is what all of you do, is that you may end up meeting people for some reason or the other, and it is very likely that your first or second or the last meeting may not really yield anything, but somewhere around there would be some serendipity, whether as co-founders, whether as customers, whether as something else. And it is important to sort of, and this has happened to me like across my career, right, in various different areas, including many people in this room, right? So serendipity through design is something that I look as part of being a team. So should we do questions now, or should we do we can keep it interactive. Otherwise, I'll sound like a radio that keeps going. So you can feel free to interrupt me if there is any questions. Yeah. So before you do a startup, I think one of the considerations to consider is that, is a startup the right thing for you, right? A startup may not be the right thing for everybody, and that is something that you guys will have to evaluate based on it. So I knew all along, passing out of, when I graduated from my engineering, that I wanted to do a startup. And I've tried at least 3 startups before I got the first one right. Incredibly large amount of loss. I have lost a fair amount of money. And then eventually I started getting that right, and so on. So it's important to ask yourself, is the startup the right thing for you? And what stage is it right for you? Obviously there is no such thing as timing. Timing is quite accidental. But important to consider if a startup is the right thing to you, right? Because if you're in it only for making money, if you do the risk, you guys are all finance guys, right? If you do the probability adjusted returns of success, it's extremely unlikely that the startup will make money because the probability of success is lower, right? So if making money is your thing, I would urge you not to do a startup, because startup is very, very hard to predict whether you'll make money, and then the opportunity cost of your time is probably going to be much higher doing something else. So you have to really do startup, either perhaps if you really want to experiment, then once you're financially stable, or alternatively, if you're okay with living a really scrappy life, because your lifestyle is going to be hell, at least until the startup matures to some level, it's important to consider whether a startup is the right thing for you to do. And now some call it passion, the others call it liking misery, because both are to some extent the same. And important to sort of figure out where you want to get it, right? In the past, there are two kinds of companies you could do it, right? One is a high growth and high investment, and the other is a medium growth but low investment. These are two distinct approaches, right? So many of you and would have done traditional companies where it would be profitable from scratch, or in a very short time it could be profitable from scratch. That's the most sensible thing to do. If you do the former, it is a bit of a tight pole walk, right? The chances and probabilities of a high growth but relying on really high investment is an incredibly hard thing to do. It is possible, and obviously many of us have done it, but it is very, very hard, right? So if you look on the left side, none of these companies have actually raised any capital, at least until extremely late stage, right? I doubt if Zerodha and Zoho has raised any capital at all, right? But at the same time, the folks on the right may have raised too large of a capital. And so it is important to fix out which of these you're going in, especially given current investment climate. It would be better to focus and gravitate towards the left side of stuff. But again, certain categories may not lend itself to doing that. So for example, to do e-commerce, you need density. You need at least a minimum density of X in a particular area before it can start amortizing the cost. So you will definitely not be able to do this side, at least in the beginning, right? So it's important to figure out where it is. And then secondly, one of the things that I find most entrepreneurs, at least until they get to sort of some gray hair stage, confused is really that fundraising is not success. Because fundraising is, generally I get congrats messages when we raise a new round. And I find it, and I obviously do thank them and do all that stuff, but it is an incredibly difficult burden. Because what you have done right now is that while you may raise a tremendous amount of capital, and we've done $240 million, right? You're taking on a ability and a personal commitment, right? And this is ingrained into all of you guys who value that karma. You're taking a personal commitment to return that capital at a much larger level. So it is fundraising. The lower amount you raise, the better it is, just from your personal sanity perspective. As entrepreneurs, please don't confuse fundraising with success. Fundraising is not success. Success is returning the capital in some sort of a liquidation or IPO or some exit scenario. Fundraising is just a path to potentially sort of de-risking yourself, scaring competitors, trying to do more, all that kind of stuff. Fundraising is not success, right? And obviously the best source of funding is profitability. So think through whether a startup is the right thing for you. But if you're going in, then go all out. But please tell your family or your spouse or your significant others that this is going to be a ride for the next, I don't know, whatever time frame. And whatever time frame you think about it, it will be always much longer than what it is. If you think it's 5 years, it's going to be 10 years. And it's probably going to be giving you social peer pressures that somebody who grew up with you at the same stage is doing better, they're having better lifestyle, all of that stuff. So you should be prepared to sort of go through that tide, because it's incredibly hard to sort of be a startup, because it is a hard thing to do. But there is a tremendous amount of satisfaction. There's obviously a huge amount of passion. So it is a hard ride, and you have to prepare not just yourself but also potentially your family to go through that journey, right? So whenever you think that something is going to be wrong, it is likely that is typically the best time to do something else, right? So this is my personal 2 cents. And then typically when you do, some idea, and this is the pitch that I have done in the past, and I keep getting this all the time, right? We are XXX AI with blockchain on YYY and e-token in ZZZ, right? This is the template you can cut and paste for anything else, right? In legal domain, finance domain, or whatever domain it is, right? And that's probably the right thing. But when you're pitching this, you're talking about the mode of getting there. You're not really talking about the final market, right? So for us, for me, sort of having done multiple startups and also have failed and been successful, I typically look at the 3 vectors that you see on the top, right? It's essentially how large is the market, is there an unmet need, and can I bring in some sort of an unfair advantage? So at least the first 2 has to be clear, and then the last one, over the period of execution has to be made clear. That's really how we approach the market, or at least how I approached things, where And you can hear a lot of fancy words like product market fit or others in there, right? So when we started Fresh to Home, obviously I started solving my personal problem, which is why I felt like there was a great affinity. I was at a dinner yesterday and somebody remarked that in the our consumers in Bangalore are the most happiest of all Fresh to Home consumers, right? And it's, to be honest, it's partly true because we tried to solve a problem that didn't exist in Bangalore. That's where we started first, right? Getting fish in Bangalore was incredibly hard. And then we solved our own problem as founders, and then eventually we extended that. So if you're doing a D2C startup, and especially one that touches real consumers, you are your own product manager, you will be your own, the others. I have typically a contrarian view to people who tell you about product management, because typically people at some stage will say, okay, let's get professionals, do all that stuff. Eventually, if you're a founder, you are your biggest customer. And understanding your needs and then extrapolating that can give you a bias. And so you have to have enough mechanism in the company to remove that bias and get you data and all that stuff. But eventually, solving a problem, and in our case, it was about fish. The supply chain in fish, as you see on the right-hand side, is incredibly convoluted and it's really, really hard to sort of get it right? Because there's multiple, middlemen between a source to the end. And that's really where we started, our journey. So Matthew understood this ecosystem. I was just a consumer at the time. And then when we saw this whole ecosystem, we soon realized that technology can be quite useful in this area. And in particular, we looked at AI. And this was when AI was still a buzzword and it was on my decks and so on, and nobody was using it, right? This was in 2015, 16. So at that point of time, we watched how Matthew was buying fish and we automated this entire process. We made an auctions engine. I don't know if you guys are aware, but we are probably the largest auctions, AI-based auctions platform in the world. People know us as an e-commerce company, but the strength of it comes from the back-end sourcing. So we have around 4,000 fishermen across 400 harbors in India bidding with us. So every day morning at 4 a.m., I would get maybe a 2,000 to 3,000 price bids. And somebody in one harbor will be bidding for sardines or the other, and they are doing it using an app. The camera of the app can detect the kind of fish, or they will put the price of the fish on there. Because I have to give answers to about 2,000 to 3,000 fishermen on a real-time basis, a human being can't do that, right? So it was basically a machine learning algorithm in the beginning. Now we are moving on towards a Gen AI algorithm. And that's really how we did the entire sourcing. That sourcing gave us enough margins to be able to price the fish at an attractive rate to consumers. And also it gave me enough quality, because this whole supply chain used to take 3 days. We were able to cut that down into 2. Effectively 36 hours is the max we go, 24 hours in the sweet spot. So, and then the same thing was equally applicable to other countries, right? So because UAE does 80 to 90% of its fish from outside UAE, and India is the largest supplier. India is the 8% of the world's fish is actually produced by India. India is the largest shrimp exporter. So as a result, this was really a natural fit. So where I'm coming in is, as entrepreneurs, while don't be enamored by the technology. So you could, and because most folks who start have got a technology background, don't start out with the XXX AI, with the blockchain, with the ZZZE token, right? Do it with finding out what's the real problem. Figure out if the technology is applicable, then obviously you can start it out. Obviously, for the spin from an investor perspective can be much higher, but at the end of the day, it has to solve a real world problem, right? You need to be able to identify what the problem is, figure out if there is large enough of a problem, right? Because sometimes when we look at the specific of the technology, the addressable market might be very small. It may not be that large. So it's important to either get a large enough addressable market and then figure out how you can make an unfair advantage, right? That's really typically what I've looked at. Use the technology then to provide an e-commerce app to consumers, and the product became incredibly popular, right? So it was about 30,000 tons is what we do today. We do about, I don't know if you're aware, but we are also a very large dairy player in India. We are not yet doing that in the UAE. And we serve about 16 million liters of milk. We do about 1,000 tons of vegetables. And we do it across 2 million customers in 140 cities, right? So we roughly do about an order a second. Ranveer Singh is our brand ambassador in India. And the brand is well known for no chemicals, no antibiotics, and no preservatives. So this is really how we started the brand journey. So again, going back to sort of the fundamentals, you know, large market need, unmet need, and then you know, fair advantage, right? These are three ways I think through it. Now, most people, when they come to me, tend to think that the market is saturated. That's not at all really the case, right? So the market is incredibly large. All of you are aware of the Indian market, but and you're aware of the UAE market as well. But let me just give you my insights on the India market. So I spent most of my career in the Valley, and at that time, it was really hard for me to do a startup in India. When I always wanted to return back to India, because the per capita consumption was really, really hard to do that. That scenario has now changed. So if you were to look at India seriously, there is a tremendous appetite right now for doing something in India. So just a little bit of primer, you're all aware of it. You know, our GDP obviously has been growing quite rapidly. But an interesting fact, hold on, yeah, an interesting fact is really around our young population, right? Now, you would have all seen how Noon Minutes are doing here or Talabat is doing here with a 10 minutes delivery. That is now become an incredibly big buying habit in India, right? It just, I mean, my own household, despite having Fresh to Home, will order from a Zepto or a Blinkit or the others at least 3 to 4 times a day. Delivery costs are lower. And as a result, when you cook something, you'll forget something and then you'll order it, right? So it is the young habit has changed a bit, right? We have roughly about 1 billion people now, of the 1.4 billion people who are between the 21 to 64, right? Which is generally considered young from a consumption habit. So for whatever else, we know how to procreate quite well, right? And that's quite obvious from this the graph here. And it is expected to be in the same trend for the next 100 years. So that's really the forecast from various different agencies. This is quite contrarian when you look at, say, the European economy or the American economy or the others, right? Because the young population is driving that thing, which means that newer habits, newer adoption habit, and hopefully for the investors in the room, India will get rich before it gets old, right? So that's essentially where the pattern is coming in. This is driving a fair amount of consumption, right? So essentially, if you look at sort of the buying habits, earlier, it took us about 10 years to get to sort of the $2,200. Now, when the government of India gives you these statistics, you generally, you know, have some sort of a disbelief. But as a consumer brand, I'm actually seeing that growth, right? This is essentially, it's unfortunate that we still have a pyramid where the larger portion of the pyramid is still underserved. But if you look at the top of the pyramid, it's getting richer and richer. And the number of households that can afford these kind of services or the others is actually quite high in India right now. And that's really the reason why when you pitch an idea, you get taken more seriously if India is in the angle, because the consumption base is going to grow and it's growing very fast, right? It took 10 years to get to the $2,200 per consumer level, and it is probably going to take much lower time to double that, right? And the number of households which can afford that have now grown disproportionately. It's no longer a pyramid, it's much more sort of, and the bulk 46% and the 7% is really where most people target, right? So there's a bunch of different trends, and you can create ideas or in any of these areas because these are all growing quite rapidly. Earlier, it was hard to get a distribution advantage because you had to go either GT or MT, and GT and MT is a very difficult, general trade or modern trade is very difficult to sort of crack. Right now, you have quick commerce players who all have ramped up because of the young population and the sort of model lends itself to really quick commerce. What we have seen is delivery models such as what Getir would have started or Gorilla or others in the UK or the Europe, which have all failed models, right? Because the cost of delivery is very high. India's delivery cost is about 40 rupees to 50 rupees. So as a result, it has really worked in India. And we see about $3.5 billion to $4 billion of new revenue that has come in. Obviously, it is new revenue which is taken from existing players, but has come to Zepto, Blinkit, and Swiggy and others. That model has now become the rampant way. So it was very interesting because pre-COVID, supermarkets were at the height of their behavior. COVID came, everything went down, and then offline came back with a vengeance. And then we said, okay, offline is the thing. And then we started investing in offline. We went through offline, and those are successful. Suddenly, in the last 2 years in India, you see a sudden difference. You see everything going to online, and some of the large players that we work with all have now cut down their footprint to smaller stores. I suspect at some point it could happen in the UAE as well. So it's important to sort of start thinking through that process, because quick commerce has become a very dominant buying habit. Imagine a country like India, $4 billion of new consumption coming through just 3 or 4 or 5 large players. So that's really what's happened in the last 18 to 24 months. And then obviously India is really a value for money. You need good for you brands, but it has to be value for money, which means that if you're doing a premium play without a vertical integration, as in going back to the farmers or fishermen, it's really, really hard to have the margins required, because you will hit a particular revenue threshold, let's say 10, 50 or $20 million. Beyond that, if you want to grow up, the price has to be meeting the market demand. So for that, you will need to have enough margin, because e-commerce or any other distribution channel has got a lot of distribution costs, right? So that's essentially where you need to play in. So Zepto, Swiggy, and Blinkit started this out. There were disbelievers in Amazon, Big Basket. Even we were disbelievers. We didn't think that people wanted a 10 minutes delivery. Now most of our deliveries are 30 minutes in India, and that has now become incredibly large, right? So there are wet markets on one side which are dominant, but then there is a huge opportunity that has come in with a newer age of distribution.
Do you think that this is going to be a similar situation where how telecom in India has happened, because where there would be a crowding and then you could see some mergers or something happening, because again India is a larger market geographically, right? I mean, you could see certain pockets with certain people, but certain with certain other brands. Do you think that is, or there will be a dominance?
That is what we all thought. Can this be a VC funded game where once the money runs out, will people go back to sort of the other habits? But what has really happened is that the sheer adoption from a consumer meant that what used to be in, like, very specifically, every dark store is getting about 1,800 to 2,000 orders. At 2,000 orders, it's bigger than any other local supermarket. So at a very simplistic level, they're all replicating supermarkets in the neighborhood, right, in the 5 kilometers radius, and very large supermarkets, right, because 2,000 orders is into 500 rupees is a very large amount of money. This is 2,000 per day. So as a result, I think the trends will, whether the trend will last or not is based on profitability. So many of these dark stores are now beginning to be profitable. So as a result, I suspect the trend will stay. We are also seeing that, right? We are seeing it in our own business. We are seeing it in the dominant business. So unlike sort of the telecom situation, India's overall consumption is about 700 to 800 billion dollars, right? So 700 to 800 billion dollars, about 1.5%. Yeah. And that's why, all the sort of, I mean, Flipkart and Amazon were, and Big Basket were one of the largest disbelievers, right? And they publicly had mentioned that they'll never go into it. They don't think it's a consumer need. But everybody is now doing, right? And it's interesting to know that Big Basket, which has been around for like 12, 15 years, and while Blinkit technically has been around in the previous incarnation as Grofers, Blinkit has just ramped up in the last 2 years or 3 years. And the Blinkit's last 3 years, the total revenue is larger than Big Basket's last 15 years of revenue. That's the same thing we see here, right? Noon, the main Noon grocery business is probably now smaller than, or much, much smaller than the Minutes business. So essentially, this is a dominant consumer habit. And as long as there is a dominant consumer, it's finally the consumer drives the whole thing. And that's what we see in here. So if you're looking at ideas, there could be a bunch of different things, because now you have a distribution channel. Trying to directly compete heads on as another quick commerce player may not be the right strategy, but there are now dominant distribution channels. So earlier, getting in this kind of a distribution was harder. Now, obviously, these quick commerce players have become very choosy. It's very hard to get in them and all that. And if you're able to cross that barrier, this is an incredibly, with some unique product, right? Because for them also, it's category expansion. There is a tremendous amount of appetite in this category. But anything you do in India, just be careful and just be realistic that the total addressable market, or TAM, and the serviceable market are incredibly different. So you would think that, most pitches you would get is that India's got this much amount of users and you do this and this will become that, right? And that's incredibly hard. From our own experience, if you use 1.1 billion as the total mobile users as the proxy of the people who have some affluence and some ability to buy, and if you take the smartphone users as the people with some more ability to buy, and then if you take the the travel sites and IRCTC or the train booking sites as the next big tier, none of these are representative of India. It's probably the ones that's below That is representative of India. But that number itself is incredibly high. We're talking about online grocery shoppers of about 30 to 40 million. These are the people who shop in Swiggy or Amazon or the others. Generally, people say it's about 100 million. I've been conservative and I put it to about 30 to 40 million. But even at that 30 to 40 million, it's an incredibly large user base. And that 10 million user base, which are the cream of India, which is what we call as India's California users, most of the media calls that, that has grown quite rapidly. This was not this big even like 2 years back, right, or 3 years back. So this growth has been fascinating. So COVID has obviously boosted the ability for people with previously who had disposable income or ability to buy, but were not buying online, has now become quite large. Obviously, it's centered around the major cities. So one of the things that, especially if many of you are from Kerala, they do the mistake of starting in Kerala, and obviously that's because they have limited resources and do that. I would recommend them start in a Bangalore or a Chennai because it's very, very hard to get both capital attention and also consumer attention unless you're in one of these large metros to start with. So we talked about team, we talked about startups, we talked about large markets, unmet need and unfair advantage, right? Obviously, it all boils down to execution, and I because ideas are great, but at the end of the day, you have to A/B test them, right? You have to try A and B and find out which is converging. You should use data, and I'll basically spend less time on these areas unless you guys in the questions we can go through LTV or CAC or any other areas that you want me to go through. But I think fundraising is a topic that I get a lot, and I guess all of you guys here are the most, I'm told, in the industry, right? So I don't know if because I've been in both roles, right? I have obviously raised a fair amount of capital as a entrepreneur, but in my previous role, I used to run M&A and I used to run an investment desk at Zynga, and that was large. I mean, I had about $1 billion of capital to deploy, and we bought companies, right? That's essentially how Zynga grew. So I've seen it from both sides of the desk, right? So raising capital and how we go, I mean, especially for the entrepreneurs. So there's a bunch of different topics, and if any of these interest you, we can go down into detail. But generally, you would bootstrap, and today it's really, really hard to do a new startup because seeds have got tighter unless you show momentum. I personally did my first round only after we hit about $2 million of revenue, right? I bootstrapped it and I got it running, and I made sure that the product market fit was working in Bangalore before I started going out for the market. But it depends upon what's the idea, right? If it's really a high burn idea, but over a period of time it is successful, it could be, but those are outliers. And I would sort of figure out sort of which bucket this falls into before you do that. And you have to be careful about the optics versus reality, right? Because the optics could be quite, I mean, valuation is a metric that you should optimize, but it's not something that you should really spend too much time on, because at the end of the day, all institutional investor term sheets will have liquidation preferences and also a bunch of other clauses to make sure that only when the investors get their money will you actually get your money. So spending too much time on the valuation and trying to optimize that is probably not the right thing to do, because at the end of the day, it is paper. In the end of the day, right? It has to return something. It has to get a meaningful exit of some sort. Typically, what I would go, at least in the early stage, is to start with some sort of a syndicate funding, start with the lead investor. And in that note, I don't know what is the typical thing that you guys do in this forum? Is this forum a group of investors coming together with some, what is the goal of the forum? Is it just networking or is it something else?
Predominantly networking.
Predominantly networking?
Predominantly networking, and we've had some. So predominantly till now it has been networking.
I would suggest, and one suggestion is, you guys should do because you're common professionals with some sort of stuff, try to come together with some sort of a syndicate funding forum from this group. I mean, if it works, you guys, there's a tremendous amount of opportunity. You guys have got enough firepower and brain power here to rival most ICs or investment committees that I would see, right? So you should, if it helps, you guys should try and figure out putting together an IC structure and make maybe like 15 minutes of your meeting with some sort of an IC decision and start curating startup, right? Most angels networks start that way, right? And all of them start, and eventually they gather momentum. It all starts from a smaller room like this and before it gets bigger. just make sure that there are no side deals when you do that, right? And if somebody brings in a deal, they should not get some extra preferred thing for bringing that in. That breaks the whole syndicate funding thing. It has to be completely transparent. But provided that, and if the minimum is really small, it adds up, right? With 50 people with a really small minimum as well, it adds up to be a really large number. And getting a group of people like this together itself, and congrats to all the organizers for putting that together, is a very hard task. So my suggestion is to morph that into something that gives you a powerful leverage, because you as a single shareholder may not have leverage in a startup or to get allocations and so on. But a group of 50 people with a small minimum is going to be a really powerful force. So if you haven't, I'm sure you guys have all thought through the whole process, but if not, my suggestion is to try and see if you can ram this forum into something that is an angel, right? A powerful angel. I don't know what you would call it, but whatever you would call it. The no diverse, we are less diverse group is probably the current motto. You should probably make it a little more diverse, but after that, I would do it as an angel network of some sort. Anyway, so.
Hey, Shan, I thought I'd just add. So we formed this group as a WhatsApp group. Ashik was actually instrumental in this one. Thank you. So Ashik was instrumental in starting this group as a community, sort of finance community group from Kerala. And I think it started around 4 years ago. And I think the idea was to sort of bring people together, share ideas, do this kind of events. And I think what we'll evolve into is also an investment club at some point. We have discussed about this, but we have not really formulated it. But I think the idea is, how can we bring people from Kerala within the community together, share ideas, knowledge, and potentially do an investment club?
Awesome. Okay. Great. So I think that's a good evolution to get into, right? I think you'll need a fixed agenda of some sort.
Yeah. And hopefully you can have people like you involved as mentors.
Sure. I mean, discovery is the biggest thing that you guys can bring, right? With 50 people, you will have a fairly large deal discovery, right? And that's just going to be much easier for you to do. And obviously, you have enough people to curate stuff. Since you're all reasonably familiar with the funding process, I don't know if I should go through the whole process, but if you have any questions in the area, I'm happy to figure out how the different rounds are structured and what dilutions you guys need and what's the current trend and safe nodes or any areas if it interests you. I'm happy to take it in questions, but we may not have time to do that. Another area that I spend a lot of time, and all of you would as well, is managing investors, right? So, and this is really, really a difficult area. And interestingly, there is a bunch of different areas where this could become, an issue. And one of the things that I typically tend to do is that I don't do as much cheerleading when it comes to the investors once they're on board, right? I typically tend to be the bearer of the bad news. And that's something that I personally feel gives better trust rapport. Because if you go to investors, and many of you as investors will be saying it, with only the good news, it is generally a formula and a recipe for failure. One of the things you have to realize is that investors have done their diligence, right? Maybe not at the angel side, but when they are institutional, they would have done their diligence. They would have figured out that, and they would have said that even though that you would have said that this is the pitch and this is where I'll get to and so on, they would have already done their mental math and diligence on figuring out what is realistically this number it could get, what are the risks. They're fairly certain. I wouldn't advise this of angels, and angels and friends and family will not understand the risk. So that's the reason why you should not do it at this stage. But once you're at an institutional investor, the institutional investor is part of your team. Trying to consider the investor as a separate entity will lead to a lot of issues, because then what you end up doing is that you will always have to make your board meetings a rosy, happy, cheerful picture, right? I'm doing this, I'm doing Y, and so on. And some of that is needed, and some of that is needed with a broader investor base, but not with your board. With your board, they are an extended part of your team, and they are part of solving the problem. They're not here to give you kudos and tell you that this is a great job and so on. If they're doing that, then that's a bad use of their time and your time as well. So important to sort of figure out that the main purpose of investor is not capital alone. It is capital in the beginning, but once they're on your board, they have a fiduciary right, and they're your investor, right? They have to basically help you with the whole process. And importantly, it also requires you to be equally transparent with them. So one of the things that I don't see entrepreneurs doing as much is that they come to the investors only when there is something good. They don't, when something is about to blow up, or which happens all the time, right? Whatever underlying assumption that you've done is probably not going to work out. And you will always have situations when you're about to run out of cash, and then you will only have 9 months to live. That's just standard boilerplate of any startup. And if any entrepreneur is telling you otherwise, they're lying to you, because that's really not going to be ever the case. So it's important to sort of carry your investors. Now, obviously, you can't do this with the broader investor base, and they'll not give you a top up in the next round, or they will probably not listen to you the next time. But with your board, you have to be incredibly transparent, and the board has to work together to do that. There are a bunch of different stuff, but I don't know if we have too much time to cover it. But one of the things that I tend to do is I don't generally look at debt, because one, personally doesn't work for me. But more importantly, unless the venture is not is not free cash flow positive, please don't consider a venture debt. I find many entrepreneurs doing that. Maybe it's out of desperation, or maybe they don't have another avenues. But if you're not generating free cash positive, or if the business line that you're trying to fund with the debt is not generating cash that can pay the interest, please don't consider that as a round. It's going to be incredibly hard for you to sort of figure out. And it also, at some point, is a disservice to your existing investors, because all debt holders will have seniority. And then whoever has done the equity investment will lose it in the event of a liquidation with no gain. So be very, very careful on that area. Corporate governance, people talk about it, but it's important to live that. This is something that, at least in the recent times in India, has been a little bit shady with even with larger companies. But this is something, I've been blessed with a co-founder, my CFO, who's so hard-assed that it's really, really hard for me to move him for like making a payment or doing something or the other. So be very careful on the corporate governance side. Investors over a period of experience of time will tolerate lack of performance, they will tolerate lack of growth, they will tolerate everything else, as long as they feel the team is honest and is somebody that is bankable, right? So essentially, developing that awareness is really what you should be very careful about. No dealings in cash, of course, and then related party transactions or IP infringements, or you're doing something else on a moonlight time, is really not acceptable, right? That has to be, if it is acceptable, provided you declare it and you disclose the whole thing. But otherwise, please be careful. Many companies would have started from and many firms would have started from a family business, which then emerged into being a VC funded company. These are two different things. At some point, when you have taken a VC investment or a institutional investment, you have accepted the reality that the company is not yours anymore, right? And that is something that you have to figure it out, right? You have to live this. You may not get there in sort of the day one, but you are looking at it from an IPO exit and diligence perspective. So you have to run the company in the same way. Anyway, more questions on this, Sid, we can talk through, but
I think we'll open the floor.
Open the floor?
Yeah.
Okay. I'll just finish this and I'm done, actually.
Sure.
Just one last thing is all the stuff that we talked about. Telling your story, we can talk through that. This is really where I started my business plan. I thought it's important to just share with you on what a business plan typically looks like, right? I generally don't believe in Excel sheets as the source of a business plan, because it just that's a derivative of this overall thing. This is a piece of paper that I scribbled in 2016, right? And essentially, if you look at it, it was really about cloning Matthew. If you see in the bottom right-hand corner, and Matthew, my co-founder, was really good in sourcing. He's an exporter. So what I did was to create software to clone him and create a fish lover's paradise. And then from there, we wanted to get to expanding into fish, poultry, and meat, and then from there become the Whole Foods of India, right? And deal with like the Whole Foods in the US, the supermarket chain, which deals only with organic or other products. So we wanted to get there. This is really the business plan that we had stretched together. Most investors believe in if you can just tell them the vision, right? So the telling the vision is really what you do. That's about 80% of your job as a CEO, right? Because that is constantly. And then secondly, it's not just about telling the vision, you have to live the vision as well, right? Because this is really where stuff is. Because I may have told this vision and this exact page in 2016 to Samish or anybody else. At that point in time, I did not have any of the products that you would see today, right? Organic products or batter or all those kind of stuff. But this has always been the dream. And GCC, if you look at my vision, was always part of the plan, right? Even though when I was starting in India. So it's important to sort of figure out how to structure your thoughts, and generally it's best to not use an Excel sheet to do that. It has to be something that is very understandable in a very simple moment. Now, when you go through this vision, you are almost always going to have cliffhanger moments. This is going to be have you guys read this book by Blake Snyder, Save My Cat? It's a very interesting book. It is just about storytelling, but any movie that you see, it is always going to be having a moment where everything, hope is lost, the hero is about to die, or somebody else, like your Avengers, the entire half of the world is dead and so on, and then suddenly somebody will save it, right? So that's essentially the life of an entrepreneur pretty much every 9 months, right? This is essentially what you would go through. So having this cliffhanger moments is quite natural. You can only withstand this pressure if you have a team that can actually work together with you to do that. So that's why I stress too much on the team portion of it. And lastly, right now the India IPO markets are extremely hot. And if you look at sort of, I actually asked ChatGPT to generate this and give you a sort of a recent or IPOs. The ones that you see on the red are the ones that are about to file. If you look at it, even sort of negative EBITDA companies, which was not the case in the past, the revenue multiples are incredibly hot. So India is definitely an opportunity. Now, this is just one of the manifestations of how that would look like. But this is incredible, right? You are getting 20x, 15x, 10x revenue multiples on companies that are. This is at the time of filing the DHRP, but essentially this is really where the market is. So there is a tremendous amount of opportunity to get there. But please don't think about opportunities purely in terms of cash scenario. I would think about it from value. So in terms of how much you give back, in terms of jobs, in terms of other impacts that you create, because otherwise it becomes too unidimensional to think through the whole process. So that's pretty much all I have.
Thank you, Shan. Shall we open the floor? Yes.
I'll go first. So I remember when we met in 2016, you were probably at the cusp of growth. And obviously, for over the period, you have raised a lot of capital from the big names like Amazon. But back in 2016, when we started talking, it was not easy. And I remember you were very tactical in terms of fundraising, talking to different investors in UAE. Tell us, what are the key sort of fundraising capabilities that an entrepreneur should have?
So I think the primary one is basically to tell the story in a much more cohesive manner. What I see sometimes is you tend to gravitate towards the technology buzzwords versus sort of telling where the end destination is going to be, right? The business plan I showed you is probably the key learning that I've had, and I've matured over a period of time to be able to tell that as the primary story, right? It's a fundamentally Series A, B, C is really all about, it needs to have some sort of product momentum, but it's all about people. And being able to convince that is really what I've learned. And that is essentially a function of telling the story in a much more cohesive manner. And then realizing that you will probably not be able to convince an investor in the first year or 6 months or the others. It is generally a relationship that grows across a couple of years of them watching you, especially institutional investors who are putting larger checks, right? Yeah.
Please.
Kudos to you as a founder, because I see it in my work daily that I meet so many founders who just use their jargons, as you first said, of not focusing on profitability, what their destination end is. Now you have touched upon some of the SAM, TAM areas along with the players. Now we are getting into a market in India where there are so many players coming up. I mean, you are aware of it, obviously. Zapfresh, Licious, especially with the quick commerce. Now all of you are vying for the same cream of this premium segment. So what do you see that, how do you ensure that your vision is still with all these players and you are able to tap them?
It's primarily because if you look at the overall segment, If you take all the fish and meat players together, the total revenue may be about $500 million, right? And the overall size of the market is about $50 billion. So basically, we're still less than 1% of the overall market. So as a result, the market has been growing. Now, the question really is that can the people afford a slightly, because e-commerce requires a slightly higher price point to cover delivery costs and a bunch of others. Especially with inflation. Yeah. So, and what we have seen now is that your own channel acquisition, we are growing about 15-20% year on year, but the partner acquisitions, because at the end of the day, all of the quick commerce players have acquired a large amount of users, right? And that is growing almost 100-200% year on year. And that is a very large number. If you assume that $4 billion, and if you take, let's say, 3% to 4% is typically the revenue penetration of fish and meat, that's an incredibly large number, right? And it's much more than a $100-200 million business. That's really where we are seeing large growth. So we are seeing two vectors. One is basically our own business growing. We then saw quick commerce as a huge vector. Then along with that, what we did is that if you look at the original plan, it was not to be just fish and meat, right? If you looked at it, it was to be the whole foods. But then I realized that starting out in the first third year or so, I realized that it's really hard to do all of these things immediately. So it took a long time for us to set up the supply chains in each of these areas. If you look at our revenues now in India, in cities like Bangalore, about 25 to 30% of what we sell is not fish and meat. It is basically batter, fruits and vegetables, and a bunch of other non-preservative, non-chemical categories in line with our brand ethos. That business is growing 200 to 300% year on year. We then started a US and Europe focus with an export business line. That business is also growing really, really high. So there is a huge amount of growth momentum. It is just that the timing may not be right to focus on everything. Otherwise, you will lose all the money on your focus. So we had to do it in a step-by-step fashion.
Hi, Shan. Thank you for a very wonderful presentation. My name is Nazim.
I want to ask, from your experience, which part you find as most challenging and difficult? Like it's a fundraising or a customer acquisition, or like a cash flow management, including that servicing debt?
It depends upon the stage in your momentum. Obviously, a early stage startup until it becomes profitable is almost always the CEO's job. A large portion is reserved for fundraising, right? And not immediate fundraising. I wouldn't say fundraising from the perspective and going out to the market. It's basically gathering the momentum, investor momentum, educating people, and so on. But that is for a company that is in a particular stage. But that is just a outcome. It's not really it's really a means to the end. The end goal is where a consumer is able to buy it to you. The company is already growing at that level.
So one more thing. Actually, you are dealing with perishable items.
Yeah.
Perishable items. So what do you do with that? Those left out.
So there is basically one of the key things that we've figured out is essentially how to manage wastages. So we use a lot of technology to figure out planning and replenishment, and we are able to plan and procure using an auctions-based engine, and it's an AI-based engine to procure it. Then we have cold storages and others, but we still see about 3 to 4% overall wastages. Typically, the industry, and if anybody who's been part of a supermarket will know, is about 11 to 12% or 13% is the typical supermarkets or other wastages. So we are able to bring it down substantially. Obviously, you can't bring it down to zero. It's about 3 to 4%. And that is purely, it's easier in e-commerce because you're able to plan, and it's easier for us because we are able to spend a fair amount of time with technology to do that. It may not be easier for quick commerce players or others because they're still figuring out the game right now.
Thank you for the presentation, and I feel this is very insightful for people who's actually getting or embarking the journey. I just have a thought. It's not a question, to be honest, but then from the angle that you proposed of having a syndicate funding model or everybody coming in together, doesn't it apply from like you guys have achieved a certain milestone. You guys are still growing and the market is huge. Can't there be a subset of what you guys are doing being offered as a satellite unit, being offered to the people? For example, many of them might be inspired to do the same thing. Maybe they could be given a startup kit from your end, which is an extension of what you're doing, and they could be something like McDonald's model or a franchisee model where the probability of failure is minimized because you can share your resources, and it actually basically it helps you to achieve your larger goals from a syndicate approach. So rather than looking at the fundraising side, can we actually think about joining hands with a particular system or a framework where you actually promote a particular community to grow?
We do that a lot with at least folks in India because that's the primary market. So if you look at many of our products in the clean label range, it all comes from entrepreneurs and it's white label. I'll give you an example as we have recently launched the millet and keto range of products. It's from a company called Low and they white label it for us, right? So we essentially provide the market access and we also help them in the early stage. We do the same thing with at least 5 to 6 entrepreneurs. But it's a difficult skill because many of these are execution intensive, and and most of the pitches that we hear are from the technology side, which is not really what we are looking for. Right? We are looking for product that have execution elements to it. But it's a great idea, and that's what we do today. But maybe not so much in the UAE because we don't have that much momentum from a critical mass because 80 to 90% of our revenues come from India. So most of our product focus is in India.
Let's assume I wasn't speaking about UAE as well. I was actually talking about India. But then there's two parts to it. There's family businesses which is revolving around it, and they need say a digitization of the model and probably scale that up. And the others is budding entrepreneurs, like someone here in the audience who's like really inspired with what you've done, and he'd like to drive it. But rather than giving him an idea and a syndicate fund probably giving him a seed capital, can we build an ecosystem? I'm talking about one level higher than Venture Studio, where we basically give him a framework, but it's not restricted to a retail outlet where he goes and drives it, but you actually give him a jurisdiction where he could flourish from there. That way, that could be a model that can be expanded as well. Just
yeah,
thinking.
I think that's the model. I mean, it may not be just with FreshToHome, but you should definitely look at that because if you look at sort of many of the angels in the valley that I work with, most of them, the primary reason you take capital is not for the money, it's for the network, right? It's essentially to the, so for example, Peter Thiel or Pinkers would have connected me probably to much larger networks than I would have been able to do on my own. So it may be not just from fundraising perspective, it could be for business collaboration or the others. So for example, the network I get with Amazon is my ability to launch in Europe, my ability to launch in others. Now, as angel investors here, you all you're quite influential, at least in the region. And one thesis, and it's very interesting that because I keep meeting funds all the time, right? So one thesis that I hear is a lot of businesses in India want to leverage capital from the region and also potentially market access. So that's something that you should probably look at facilitating because breaking into the UAE is hard, or Saudi is harder, right? It's just a extremely hard job for the market. Interestingly, I'm speaking about this on the GITEX on Monday, but that is something that all angel networks are expected to do, right? And that's essentially not been formulated because it's too busy and people are not able to do that. Some networks do that much more than others, but I would definitely recommend that as a key point to that. Now, we do it much more at a lower level because all of our farming is contract farming. So we give capital to farmers. So for anybody having a pond, we give them, let's say, 2 lakh rupees of capital, and then we do a guaranteed buyback with them. That's the model that we work in India for all of us farming operations. We don't farm ourselves. We get a farmer to do that, and we provide capital, technology, and the others, especially in fish farming.
Thank you. Thank you.
Yeah.
Hi, Shan.
Hi.
It's been a very inspirational story to hear.
So there won't be, there's probably not another Blinkit or Zentral coming along in the next few years. But then I see a lot of opportunities in the supply chain aspect of the entire India growth story. So where do you think is the biggest opportunity lies in the supply chain? Is it in, let's say, the farming or the production, or in the storage, something like cold storage? Because a lot of fresh producers get perished due to lack of cold storage. So, someone who's been in the fresh produce, what's the potential of cold storage supply chain from an investor's perspective in India?
So these are areas that are getting a tremendous amount of attention right now, but these are harder businesses. These are not the most easiest businesses to do, right? And but if you look at sort of from a profitability standpoint, once it's set, these are businesses that deliver, they are free cash positive, deliver a fair amount of stuff. So there is a fair amount of investment, but innovation is really hard. And but so you have to figure out what that angle looks like. We see a lot of companies that are doing it in supply chain. Supply chain is an area that we see a tremendous amount of companies working on in India. We see a tremendous amount of appetite for companies that are doing in the food integration. There's a number of companies which are working out in various different categories, right? And these are categories that we would think is small, but the total sheer absolute number is so large that you would be mind boggled. I'll give you an example as so if you look at sort of specifically on certain products, right? So if you look at one of the largest companies here, and I won't take the name, they have an unknown brand, not relatively unknown brand in Maharashtra that does oils, right? Sunflower oils. You wouldn't even know that that brand existed. That's $1 billion in revenue. So the sheer appetite, if you are able to go to the farmer or the fisherman and then reduce the inefficiencies in the supply chain and able to offer at a price point that can compete, then you will see a huge uptick. But that's very hard to do. Requires tech and other sort of perspective, but it requires an operator. Like I wouldn't have been able to do this business without Matthew, right? Because he understands the operations element of I would go into a harbor, I'll not come back alive, right? It's just a mafia that is very hard to break into. So if you're able to crack that, so the barrier to entry in the business is operational moats, and that's harder in that businesses. Now I wouldn't rule out another Blinkit or Zepto coming in. In fact, in the last 2 weeks back, Swiggy has launched a 10 minutes food delivery. And that's quite interesting. Most people dismiss the 10 minutes e-grocery delivery when it started, including me. And we were all mistaken. We would probably see a much larger momentum in some other category, right? So it is very likely that there could be other avenues to do that. Obviously, these guys have significant amount of scale, so it's harder to sort of, and they have the network effect, so it's harder to go against, but I wouldn't rule that out. And especially with AI, there's genuine applications where a fair amount of the overheads can be reduced, right? And we are seeing it in pretty much every single category that we're going to. So there would be a huge amount of synergies there.
The query is, it's very interesting the way you have bridged the whole, your learning from Silicon Valley and brought it here. So something that we keep hearing and reading is innovation at scale, which even Peter Thiel professes a lot, OKR. So how it's been in this particular thing? Because even in your vision statement, it's like no ammonia, no antibiotics. So the innovation at scale, in different industries it's different. But how has it been? What's the kind of
So actually, if you are in India, if you've actually been living in the last 5 years, it is a matter of innovation because the sheer sort of pace at which things move is so rapid, right? I mean, nobody would have predicted that offline is now almost like large format offline is on its death knees in India. Yeah, except maybe for DMart or others, the traditional players are all struggling. Like they're shutting down all hypermarkets. They're all going into smaller format. This is something that nobody would have forecasted because if you look at sort of at an overall level, less than 0.1 or 0.3 or 0.4% of India's overall supermarket ecosystem is furnished by institutional players, right? And so everybody would have thought that would grow, but that's actually not been the case now with quick commerce players. Now, and then suddenly in 2 months or 2 years, you're seeing another trend, which is the quick commerce growth. So it's very, very hard to know what trend will catch on. And so that is purely innovation, right? So this is perhaps, Zepto may have started it, right? Or Dubai Kid would have started it. And then eventually Blinkit caught on and then grew it from there. And then it started enough momentum. So I wouldn't dismiss the innovation. Innovations would be like is the lifeblood in which a consumer buying habit works, right? Fundamentally, it's all about consumer buying habit. If you're able to get consumers to buy in a particular level, that will become the dominant force. And in all the sort of forces in the universe, VCs, ecosystem, and others will align accordingly, right? And that's really what's been happening.
My name is Azhar. I run a startup called DreamPot, and back in India. And what we focus on is conversion of window shoppers, which is a large segment, and we are looking to bring in an alternative to EMIs and BNPL so that we can push the window shoppers into shopping. So I just wanted to know how big an issue it is in your industry or in your segment where people come browse but not really translate into shoppers.
So because it is in general a big issue, but because we come from the same domain, because I used to run product management for Zynga, right? Our life is all about optimizing conversions. So we see about 38% conversions from the top of the funnel to the final add to cart and payment, which is incredibly high. Typically, it's about 13-15%. So in our business, it's not that a problem, but it is a general problem for almost all e-commerce players.
Hi, myself is Jazz. Just a very basic question. Somebody looking to start up. How do you come up with ideas? Is it also serendipity, just as in your case it was, or what is the mindset? How should you look at it?
That's a very hard to answer problem.
Yeah,
because it varies, but almost 80 to 90% of all the founders that I know, it's personal serendipity. It's serendipity by design. In a sense, you keep looking for things that you could make it into a problem, and then eventually it becomes something that you can do. So just to give you a sense, when a bunch of us have got the entrepreneurs itch every sort of 8 years, 10 years time. So after Zynga, it was not like FreshToHome was something that hit us accidentally, right? Obviously, it was something that we did not expect we will be doing. So we started out with we incubated. A bunch of us got together and we incubated multiple different ideas. So we actually A/B tested at least 5 ideas. The first thing that we incubated was creating a mobile operating system that could rival Android, because a bunch of us knew how to do that. And then we incubated I don't know if you guys know Urban Clap kind of app to do that. Then we incubated 3, 4, 5 ideas, and this is all in 2014-15. In fact, even after getting our first round of funding in FreshToHome, we were incubating a bunch of different ideas, obviously with the knowledge of the investors and so on. And but none of them took as much momentum as FreshToHome, which again was something else that came in through a serendipity. So there's no easy way to answer your questions, because at least 3 or 4 of them were organic ideas, but were not problems that we faced, right? It was basically something that we could see as a area of opportunity. But the one that really fired has been my personal need. So as a founder, my personal need, especially on a consumer-facing idea, is typically what that generally works. But if it's a B2B idea or a SaaS idea, or if it's an enterprise idea that is not for you as a consumer, then you're probably going to come up with that outside your sort of own personal experience.
one more thing. In India now, a lot of consumer brand startups are coming, like B2C, like say food products or beauty products or something like that. What's your view on those in terms of opportunity size or how?
It's incredibly nascent. People think that it's saturated, but I think it's quite nascent, because especially with no preservatives, no chemicals, organic, leveraging Ayurveda is an incredibly fast-growing area. If you look at my previous slide, I think Nykaa trades at 42x of revenue, right? So I don't know if that's while financial metric is just only one of the metrics, it's an incredibly big, large area. We get pitched a lot with organic soaps, cleansers, and since we don't do that business, we are not able to do that, but that's an incredibly large opportunity, but it is extremely competitive. Your FMCG players have marketed that category quite nascently.
You also mentioned FMCG is evil.
Yeah, so that was basically FMCG's evil is the jingle that I had written before. That was primarily to say that anything that is processed or added with, I don't know, for example, if you buy sausages, you will see phosphates or sorbates or others in it, right? And these are for curation of that. We don't use any of that. So an FMCG player is optimized for a long shelf life in a retail. and we don't have the constraints, so we are able to do it without any of that stuff. That's how we've figured it out. I'm sure that you can find a similar niche in skincare or cosmetics or the others.
And my son was in Bangalore around the same time, so I had faced the same fish issue.
I see. Okay. So you know the product market fit.
We'll take last two questions. Yes, Adil.
So in terms of, I saw your, thanks for the presentation, and in your business plan you had there 2 million, 20 million, 200 million. So
That was all made up numbers.
you already had the vision, and it's more hyper scalable.
I had the vision and I had the first year's revenue. I had no clue what it's going to be. So I said I'll multiply by 10, right? 2 into 10 is 20, 20 into 10 is 200. That's the only logic. There's no math behind it. Then we created an Excel sheet to fit the math behind it, but that was pretty much what it
In
is.
case, rationally thinking about it, if you knew the figures were not that scalable, but there was potentially an opportunity, a gap in the market, would you have still pursued it?
No, I would have looked at the denominator, right? The denominator is quite high. It's a $50 billion denominator. On that $50 billion denominator, even if we get 0.1% or 0.2%, it's a viable startup. So that's just the math. And that's it. All savvy investors know this already, right? If all of you guys know it already, right? The first pitch from any entrepreneur will be a made-up number, and that's perfectly acceptable, right? And that's just how the entrepreneur is showing you confidence that he understands the domain, and this is where the eventual journey is. And nobody is going to ask you about this calculation and this formula. How does this arrive at that stuff? This is your vision. That's what you're pitching, right?
On the exit strategy, because what we currently see with many investors, whether we during on exit strategies, what we currently see during any fundraising or even through exits is like people doing the multiplier on the revenue when even there is a negative cash flow. Yeah. So are you also one of those, because you have been in a lot of startups? Where do you see that? Is that a correct exit, or is it like people still thinking is that I get my capital whether and then a return of a PIK even if the underlying business is still in a negative cash flow?
So the markets are quite democratic.
Yeah.
So the markets are quite democratic that way, right? In the sense that the decision is left to the markets. And markets are quite savvy. So while you might see this, Zomato listed at about minus 25 or 30% negative EBITDA. But at the same time, they had a growth rate of probably about 100x or 50x or 60x per year, right? Those bets are really, really hard to find on a mid cap to sort of a large cap valuation. And as long as, and obviously there is a 1 year lockup for the promoters and so on. So it's not that easy. So the underwriting bankers, hopefully, now it's very hard to say that for SME indexes and so on, but for a mid cap to large cap in India, it's extremely savvy. I mean, because I go through the process all the time. What I see is that unless there is a very, very clear path to profitability, it's extremely unlikely that your IPO will be successful, or your IPO may tank in a year's time, right? So that's a risk that less and less people would be doing right now. We have, our mature cities are profitable now, fully profitable, but we are in 140 cities, so it takes a while. E-commerce is a business where there is a need of a particular scale before you can amortize your factory costs, your delivery costs. That's where we see it. So we typically tend to look at it as by parts, right? Is this city profitable? Then can we make the next city profitable? That's exactly the story. If you're able to tell successfully to the investor, is when your exit scenario would be crystallized. So many of the companies that you saw here have a reasonably good plan to get there, and only if that plan gains momentum will they actually make success out of it, right? Because success is really not fundraising, it's really an exit in the end of the day. That is something that they've baked into the plans, is what I would hope. Now obviously there could be outliers.
It's a sort of a vicious circle, or like do you think it's an
I don't think so. I think the market has now become quite mature. Maybe in the first couple of IPO offerings in India, that may have been the case. Now the market is reasonably savvy. It knows how to value it. There is lots of euphoria, and there'll be a lot of retail investors who are not really understanding what they're doing. But the institutions are quite mature at this point, right?
It's such a wonderful, informative session. Thank you so much for that. So I just want to ask you, touched upon the IPOs and various IPOs you have touched upon. I just want to ask you, what's your view on investment opportunities in India, especially in equity markets, as compared to say US and other developed countries? Just want, yeah.
So I'm not a investor. Not done too much capital market exposure, but from at least the very little work I've done, if you're able to do a pre-IPO placement in any of these companies before they go public, at least the experience of any of the sort of fund houses that I've seen is incredibly positive, right? There is a huge clamor to get in pre-IPO. Now, post-IPO is essentially something that you have to look at the fundamentals and figure it out. But pre-IPO, there is a huge boom. Now, if you like traditional institutions, so for example, one of my friend's companies is being funded by the alternates arm of Bajaj Finance, which is like mind-boggling. Nobody would have done that. As a traditional player, extremely conservative with a fairly conservative outlook, right? And they're doing pre-IPO in a negative EBITDA company, which has a strong path and so on. So we are seeing that as a pattern. Pretty much all the family houses in India are in that mode, right? They're all looking eagerly they're doing some amount of early stage betters, but there'll be really small check sizes. But the larger check sizes are all going with a pre-IPO with a 12 to 24 months or 18 months window to do the listing. That's just become a trend in India. In fact, that's now become one of the most largest source of capital. In fact, you might be able to raise more capital in the pre-IPO market or in the public market now than the more growth stage markets right now. And you should remember that most of the money coming into the Indian capital markets used to be earlier foreign investments, but now it's all largely SIPs, mutual funds, family offices, and India retail investors, right? So it's become largely Indian domestic money right now, and that's what's driving the euphoria.
Okay. With that, we will close the question and answer session. Thank you very much.
Thank you, guys. Great to see you.
May I request Ajmal to come over and hand over a token of memento?
Bye. Thank you. Great to meet you.
That was not only an inspiring story, that was a very insightful journey to the startup world in India. Shan, request your presence. We have a few induction to the money market AI, diverse career spanning entrepreneur and consulting with EY and management position at SME.
Hi, looking forward.
Abdul Majid, Islamic Bank, seasoned investment advisor for over 20 years. Javed Parvaiz,
Good to see you.
chartered accountant, presently with Walkhod. Jeffreen Moidu. Yeah, that's very good. Jeffreen Moidu is analyst, concept, realization management.
I'll give back to you.
MSc Management, University College of London. Mohammed Abdurrahim Biran, Revenue Optimizing and Analysis Manager, Masar Solutions, specializing in automotive industry.
Hi.
Mohammed Samir Pari, Head of Finance
Great to
and
see you.
Business Management, Ojfel Technology. 20 years of proven track record in finance. Mohammed Rijaz Mustafa.
Okay.
Mohammed Rijaz Mustafa,
Hi, welcome.
Team Leader Internal Audit. 14 years of experience, Chartered Accountant. Mohammed Shamil Ethol, Managing Director, Ethol Ventures. Master's degree in MSc Banking and Finance. Muzammil Muidur Kuti, Finance Manager, Australia, Middle East, 12 years of experience in UAE.
Great to see you.
Nazruddin V. Hamza, Senior Manager, Treasury, Abu Dhabi Islamic Bank.
Hi, good to see you.
Over 25 years of experience in financial management, liquidity management, FX trading. So that's my alley. Nidal Abdul Ghaffur, investment analyst, national bonds. Experience in investments across private equity, structured products, and infrastructure and retail. Rafiz, our host, Rafiz Rahmatullah. Thank you. Thank you, CEO of Zentral, serial entrepreneur driving innovation and growth, a key figure in the flex space industry. Rami Zainuddin, portfolio manager, Clay Capital, Ali's colleague.
Hi, Lily. Thanks, man. Nice to meet you.
Riaz Abdul Qadir, portfolio manager at Integra Asset Management, equity investor with over a decade
Great.
of investment track record in MENA. We usually share notes on corporate governance in the industry. Tahseen Rasak, I hope I pronounced it right. Relationship manager, retail mortgages, the person to contact whenever you need properties. Ibrahim Suban, accountant International Energy Forum. I think he's all the way from Saudi. So a bit about Ibrahim.
Good.
He has a distinct honor in representing India at a prestigious International Energy Forum, where he serves as an account officer. Ibrahim, would you like to have a few words? You've come all the way from Saudi to attend this event with you, Shan.
Good morning. Assalamu alaikum. It's a privilege and honor here to be here on the Money Matters Forum. And only to see you and listening to it. That is the purpose to came here. And it's a great insight. And in his journey, what I understood that in 2016 to 17, he has a clear vision with where now and where to reach, and other objectives can overcome. Is that right? Sure. And more than that, Ashik, where is Ashik? Yes, he's our Indian Business Forum driving the.
Ashik is trying to cross-pollinate his Saudi.
So we missed the Ashik. Thank you, Ashik, for inviting me. I don't want to much take of one thing to remind you that golden rules of Warren Buffett. Rule number 1, don't lose your money. And rule number 2, which is the most important, don't forget rule number 1. Thank you very much. And Money Matter Forum, it's a shaping the business, not only the business and entrepreneurs, more than financial expert. If someone asks me which is the biggest charity in your life, I have only one answer. That is, you can share your knowledge, your expertise, those who come behind, the new generation. With that, thank you very much. Have a great day. God bless you.
Thank you, Ibrahim. Thank you very much.
Thank you also.
Ibrahim actually represents India in the sustainable global energy dialogue between 72 energy consuming member states. So that's a big role, Ibrahim. Thank you. I guess that's about it.
So did we introduce about 20 people?
18.
18. So if I were an entrepreneur, I would pitch this. You are about 50 people in size. I introduced 20. I've grown about 50% month on month. Is that the pitch? 100 people. Okay. So 50% month on month?
Month on month.
We don't do this on
Then you multiply it by 12. Then you get ARR. So that's really how you pitch the ARR.
Host.
Mr. Samish. Please.
Thank you very much, Asim. So Shan, it was an amazing story. and
Thank you.
amazing insight. So so we hear a lot of amazing stories, but the insight is truly what we, what we gather here, and the insight throughout the journey. You've mentioned it from 2016 to all the way here. It was absolutely fantastic. Great learning opportunity for us. Great insights to take away. Thank you very much.
Thank you so much. Thank you, all of you.
Wanted to thank everyone being here. Wonderful events like these are made special just because you guys are engaging so well. Okay, thank you very much for each and every one of you. Thank you to the organizing team. All right, it wouldn't have been possible without yourself. Thank you. Thank you to special thanks to Rafiz. Rafiz is here. Thank you. Thank you very much for this facility. It's an amazing facility. Thank you very much. Thank you. Thank you, Shan.
Thank you, guys.
Thank you, everybody.